Thanks for joining us. We're going to be discussing Northeastern BC and why it's Canada's best kept real estate investment secret. My name is Mitch Collins. I am an investor who has been actively investing in all aspects of the real estate market in Northeastern BC for the last 15 years, as well as a realtor with Century 21 locally in town. What we're going to be discussing in the presentation is an area overview of Northeastern BC, coupled with the economic drivers that are really pushing our market right now. And finally, we're going to talk about the demographics and the people that live and work in this region. Okay, so jumping right into it, Fort St. John and Dawson Creek are situated in the northeast quadrant of British Columbia, right adjacent to the Alberta border. And it's important to keep in mind how small of a market these towns are. Fort St. John is approximately 22,000 people, while Dawson Creek is in the neighborhood of 13,500. That's going to be important later on as we talk about the size and scope of some of the major projects that are occurring in our region right now. So we're going to take a look at the major industries that are really driving the economy here in northeastern BC. And to start that off, we'll look at agriculture. Currently, the Peace region produces about 95% of all of the grain in BC. So we've got some really great farming and arable land in this area. Next is forestry. People generally tend to think that Fort St. John and Dawson Creek are predominantly run by oil and gas. And while that's true to a certain extent, forestry is a major employer, bringing over 2,500 high-paying full-time jobs to our market. Next is mining. So we do have copper, coal, and copper mining within an hour's drive anywhere of Fort St. John. Finally, oil and gas. We're going to be spending a lot of time discussing that particular market upcoming in the presentation, and there's a lot going on behind that. So hold on, we're going to be jumping right into each of these in detail. So before we go any further, we're going to take a look at really what drives the real estate market. Now, it's no secret, it's pretty predictable if you know what's going to push a market. And let's take a peek at what those key indicators are. First thing is gross domestic product growth. You need to be looking at a region that has strong economic drivers that are pushing job growth. So GDP growth will always lead to job growth. And after you're seeing job growth take off, approximately 12 months later, you're going to notice the population is going to really start to drive in that region. And that's simply because people follow jobs. Anywhere there's a mill opening or a big plant that's opening up, people will come in for that work, which will of course lead to population growth, which next in line will lead to our increased rental demand. Once that happens, it leads to common sense. Decreased vacancies will result, and then increased rent. Supply and demand means that when you have more people looking for a product, price points for those will increase. After that, you're going to find property purchase demand increasing, and that'll finally lead us to what we're looking for as investors, which is increased property prices. None of that can start off without going right back to the very beginning and starting off with GDP growth and job creation. And that's something we have very strong fundamentals for here in northeastern BC. So we need to find areas that create real gross domestic product growth. Now, what's exciting about investing in BC right now is that BC is finally leading Canada in economic growth, and it's expected to continue that trend for the next 5 to 7 years. Now, what's leading all of BC is the northeast quadrant, and primarily Fort St. John. So according to BC Business, Fort St. John has been, for the last few years now, the top place to find employment in British Columbia. Now that's pretty exciting because BC is leading Canada in economic growth, and Fort St. John in northeastern BC is leading that growth. So that by default means that we're the strongest economic region in Canada right now. So while that's all exciting, don't pay too much attention to the headlines because we do not have things like orcas and blue water that much of the year. Very cold here, and as I say this right now, it's about 25 below outside. So while it's a great place to find work, that picture is a little bit misleading. So a region can be the best place in the world to get work, but if you can't access it and get easy, affordable access, then it's a lot harder to see growth really take off in a region. One of the beautiful things about Fort St. John is that we saw WestJet expand into our market here about 2 years ago. So they've been accompanied by Air Canada. Now with WestJet coming in, it's cheap, it's affordable, it's easy to get in. There's direct flights to Calgary, Vancouver, and more several times a day. Those really made growth happen a lot easier in this marketplace. So in addition to WestJet coming in, we're also seeing some major ground transportation infrastructure upgrades happening right now. BC government is paying for the highway being twinned between Fort St. John, Dawson Creek, and Grande Prairie, which is a major capital expenditure. By twinning the highway and making it 4 lanes, it's going to increase the access, make it much easier for industry to come in, and that's a huge driver for us. So that's really exciting to see happen right now. So we're going to talk for a few minutes here about what's really driving job growth here in Fort St. John. And it's more diversified than you'd probably expect at first glance. So let's jump in and really see what's pushing the marketplace. So one of the major employers right now is Fort St. John's new regional hospital. This has been opened up in 2014, and it's nearly a $400 million project on a 40-acre parcel in the city's northeast quadrant. Currently, it's running 55 beds and a 123-bed residential care facility. So this was a massive investment by the government in a town of 23,000 people. You don't see that kind of federal and provincial government's investment in infrastructure unless they expect it's going to be needed long term. So really great indicator as to what's coming to our marketplace. So as you can see from this overhead video that was taken last week, this is a state-of-the-art facility and just a massive piece of confidence from both the federal and provincial governments in our growing economy. Next is forestry. Now we do have a sawmill, an OSB mill, and a pulp mill, but here we're going to discuss Peace Valley OSB. It's in 2005 when it was built. It was the world's largest OSB mill. I think today it's the second largest OSB plant, but just a massive world-class facility. So in total, forestry is creating about 2,500 jobs, and these are all very high-paying jobs, just minutes from the downtown core. So another great addition to Fort St. John. Now in addition, a video is always worth 1,000 words, so I'd like to show the overhead view of the Peace Valley OSB facility. Now I personally did work here for about 4 years. I bought my first 35 properties running that white crane you can see in the bottom of the video right now. So this mill operates 24 hours, night and day. And right beside it is Fort St. John's sawmill. So this is about a 25-year-old sawmill, very active. And what's not being shown in the video is our pulp mill, but super active forestry industry. As you can see, we're running on several different commodities in our marketplace. Now for some really big news, we're going to discuss BC Hydro Site C Dam. If you haven't heard about it, you're probably listening to this from Toronto or somewhere else. This is big news in Western Canada right now. This BC Hydro Site C Dam is Canada's largest public infrastructure project anywhere in the country occurring right now. So this is approximately a $10 billion project. It's going to take between 7 to 12 years to construct, and it's literally 7 kilometers from downtown Fort St. John. I can take clients from my office and be on site to show them the progress of construction in 5 minutes. This project is so big, it's expected to bring in 35,000 direct and indirect jobs and as many as 8,000 people on site for a long time. So this is going to be a big addition to town. And what's really exciting is what's going to follow up next. And that for the past 6 months, BC Hydro has been under construction. So there's another video that I'll put out that you can take a peek at on YouTube that shows exactly what's happening on site. But there's about 600 people on site right now prepping and building the dam site. And it's going to be a major employer, and in its own right, it's really going to push major economic growth into Fort St. John, irrespective of things like LNG and the mining initiatives that are occurring. So this is Site C on the ground. As you can see, construction's commenced about 3 months ago, and we've got some massive development underway on the site right now. Currently, they're building the giant man camp to house some of the personnel that'll be working on site. You can see all the modules off to the right. There's currently a bunch of equipment trucks. They've cleared off all the land, and this is just on the south side of the riverbed. There's a whole bunch of activity happening on the other side of the river as well. So Site C just beginning, major addition. This is Canada's largest public infrastructure project, and just a fantastic addition to town. Okay, so what is LNG? And again, if you haven't heard the term LNG, you're probably listening from somewhere in Eastern Canada. LNG is simply liquefied natural gas. And what we're going to discuss here real quick for anybody that's not aware or familiar with it is just what the process is. So starting off on number 1 here, we need to drill a natural gas well. So after a well is drilled, the gas flows out a pipeline into field processing. Once it's been processed in the field, it'll be kicked over to a transmission pipeline, and then from there it'll be sent down to the coast of British Columbia and put into a liquefaction processing facility. So essentially what happens is that the natural gas gets frozen and condensed and it turns into a liquid. From that point, it's shipped or loaded onto tanker ships, much like oil, and kicked out to a new spot, wherever that may be. Typically, it's going to be Asia, part of Asia, or going to be China, Japan, Korea, India, and those are major emerging markets. When it's received, they offload the liquid and they regasify it. So basically, they warm it up and it expands back out into a gaseous state again to get sent to the homes that it'll heat. So that's the process of LNG. And in the next few slides here, we're going to discuss why it's such a big indicator for not just northeastern BC, but why it's so important for all of Canada. Okay, so why LNG in BC? Why is this such a big deal for us? Well, first thing is we have a lot of natural gas. Okay, in the northeastern BC quadrant, we're sitting on a shale formation called the Montney Shale Formation, and it's estimated to contain approximately 2,000 trillion cubic feet of gas. Well, that's a lot. I mean, how do you even put that into perspective? I mean, what does 2,000 trillion cubic feet of gas look like? Well, let's put it into these kind of terms. It's far more than we'll ever use. In fact, if we had 5 LNG terminals operating, exporting full-time, as well as all of Canada's domestic needs, we would have more than 150 years of supply just from what we have around us in Fort St. John and Dawson Creek. So, by rights, it just makes sense to find a market to ship that gas into. And we're going to talk about why we're very, very strategically located and why we're fortunate to be located right in this quadrant of the world, because we're very, very close shipping corridors to the major markets that need our supply. So why LNG is such a big deal in BC is because we have a ton of it, more than we'll ever need, and we're well situated to supply it to the world that requires our energy. So BC has the energy that the world needs. The world population is expected to reach 9.1 billion. So over the next 20 years, the world population is anticipated to grow by more than 25%. That explosive growth is happening predominantly in China, India, Japan, Korea, and more. All of the growth will continue to push demand for energy globally, and LNG is the source that these countries are after for a variety of reasons, which we'll discuss here in a minute. So natural gas is the world's fastest growing source of energy. Over the next 20 years, global experts predict that as coal and oil demand flatten out and nuclear power declines, only natural gas is filling that void. Therefore, it's taking a bigger piece of the global demand pie over the next quarter century globally. That's a big deal for us. So Canada contains world-class shale gas reserves. In fact, how much is pretty amazing. When you look at some of our major competitors, namely Australia, who's hoping to become one of the world's largest LNG exporters, Canada has much more of a supply than Australia does, and even about double what Russia has. Now, the beautiful thing about Canada's natural gas supply is that the vast majority of that is located in the northeastern BC quadrant. So when we talk about Canada's natural gas supply, predominantly that's coming out of the northeast quadrant in the Montney and Horn River basins. So right around Fort St. John and Dawson Creek. So we're sitting on a world-class resource that the world needs. So currently there's over 40 import terminals of LNG planned or existing between China, South Korea, Japan, and India. Now, what's exciting about that is that Canada and British Columbia is the closest shipping corridor to those major countries through the Pacific Ocean. So because we're shorter, it's about 2 days of a shorter shipping route from Canada than almost any other location in the world, which means that we can get our supply of natural gas to the countries that need it cheaper, which is a fantastic thing for us, especially in the tighter energy pricing that we see in the market today. So in Western Canada, there's a total of 21 LNG terminals planned. If everything went ahead, the combined investment will be well over $190 billion. So when you look at the list of some of the people that are here, there's Petronas, we've got Shell and BG, PetroChina, which is the world's largest oil company, ExxonMobil, Encana. All the major players globally are setting up shop and wanting to create an industry in British Columbia for the reasons we talked about before. So we're going to get into what that means for us in the real estate market going forward in northeastern British Columbia. Okay, so even though there are 21 LNG terminals planned, it's likely that we're going to see between 3 and 5 built by most estimations. But the two top contenders that are planning to come out are Petronas and Shell. So we're going to discuss each of their major terminals in a little bit of detail, and you'll see the impact that they're likely to have on our marketplace. So the first LNG company we're going to discuss is Petronas. They're operating as Pacific Northwest LNG, and Petronas is actually the Malaysian government state-owned oil company. So they came into Canada a few years ago and bought out Progress Energy, and to date they've spent over $8 billion in acquiring oil assets and land and infrastructure to gear up for LNG. So in total, they're looking at spending approximately $60 billion in total capital investment between their LNG terminals, pipelines, and their long-term drilling program. And this would be the single largest public or private investment in BC's history. In fact, any one of these major LNG terminals in their own right would be. So Petronas is expected to be out of the gate first. They've spent just an unbelievable amount of money and time to get to where they are right now. And they're the first one. So we'll discuss them a little bit in detail here going forward. So Petronas has recently announced that they're shovel ready and ready to get into the ground and start construction on their LNG terminal, pending the final federal approval that's expected to come out in February. So as I say this, it is January 15th, and we could see the federal ratification of Petronas's LNG terminal as early as in the next 60 days. If that happens, Petronas has stated they're ready to start construction on their terminal immediately, which is going to have major implications in housing demand in northeastern British Columbia. So the next company we're going to discuss is Shell International. They're operating as LNG Canada, and their LNG aspirations could bring in over $50 billion for their project alone. They're planning potentially over 10,000 wells in northeastern BC to support their LNG terminals. That's going to have a major impact in both Dawson Creek and Fort St. John. Now, one of the cool things that Shell has done, actually Petronas has done this as well, but Shell has brought in partners like KOGAS, PetroChina, and Mitsubishi. Now, each of these are state-owned companies. KOGAS is from Korea, PetroChina is Chinese, obviously, and Mitsubishi is from Japan. And so they've brought them in as partners, and incidentally, these partners are the end users that want the supply of natural gas. So basically what Shell has done is they've brought in the end suppliers or customers that want their supply and made them partners so that they don't have to worry about who's going to be buying their gas. They've basically brought their customers and end users in as partners, which is just a really brilliant move on their part. So it makes the economics work a lot easier, especially in the lower pricing that we're seeing in the market today. That was a really fantastic forward-thinking move when they did that several years ago. So last Friday, January 7th, British Columbia was awarded one of its biggest birthday presents ever, in that the federal government awarded Shell with a 40-year export license. So that's massive news for the LNG industry. Shell is really pushing forward to get out of the gate. And with this announcement, it basically put them in front of Petronas to be the front runner for LNG. So while there's been a lot of negative media announcements and things because of the price of oil and just the global economy, the LNG front in northeastern BC has never looked stronger with these recent announcements. So to do with LNG, the BC government expects potentially over 100,000 new jobs to be created in BC by 2020. They're expecting a total industry investment of approximately $175 billion, and that's going to filter out to approximately 58,000 direct and indirect construction jobs, leading into approximately 24,000 permanent direct jobs for operations at the end. That being said, the government is expecting more than $100 billion in revenues over the next 30 years from LNG. So LNG is a massive deal for the provincial government, but also for the federal government. We don't see industry like this coming into Canada very often. This is a very rare, once-in-a-lifetime opportunity for Canada to basically take action on. Now, that being said, especially in a market like we're in today, where Alberta is unfortunately not doing the best, people follow the money. So if you have an area that's creating gross domestic product, There's job growth happening. You're going to have people leading into and looking for those jobs, which of course is going to lead to to the kind of conditions in the real estate market that us as investors really are happy to see. And of course, that fundamental is going to lead us to population growth, families moving in, demand for housing increasing, and that's exactly what we're looking for. So let's take a look at what the population projection is expected to be in northeastern BC. Currently, there's about 72,000 people residing in all of northeastern BC, and the BC government is expecting that by 2020 that could hit as high as 123,000. So effectively doubling in a 5-year period. Now, when you stop and think about that for a minute, that's unprecedented growth, and the amount of people coming into the region to support that is going to lead to some conditions in the housing market that we frankly have not experienced before. So we're going to explore median household income and the importance of average incomes in a family with how they can support rising real estate prices. So there's a reason that Fort St. John has been voted continually the best place to find employment in British Columbia, and that's because people make more money here than anywhere else. Average household income is well over $100,000, and as you can see by the chart here at the top right of the screen, the redder the chart, the more that the 5-year income growth has been. Okay, so the highest on the whole chart obviously has been Fort St. John that you can see here, and in that 5-year period we've seen over 18% income growth. So when you compare that with the Lower Mainland, they don't really compare. There is no comparison. Fort St. John is the clear leader in all of BC, and BC is leading Canada in economic growth. So with the unemployment rate, BC is sitting at about 6.8, and northeastern BC is well below that. So with rising demand, it's going to lead eventually into lower vacancy. So we are currently at about a 5% vacancy rate in Fort St. John right now. With the demand coming in, with the job creation that's happening, we're expecting that trend to really tank, and I expect that we're going to see vacancies approaching zero probably in the next 24 months. Now, of course, when you have low vacancies, you're going to see increased rents. That's just supply and demand at work. And with these projects and infrastructure projects coming in and the job creation, that's going to be one of the natural consequences of reduced vacancy. Rents are going to increase. So when demand increases, when people are moving into a region and they're renting more and more people are looking to buy, the demand overall increases. What's the result? Well, pretty easy to guess it. Real estate values have to go up. Look at what the strong demand did to Fort McMurray. As I go through this presentation right now, Fort St. John's average household value is about $410,000. When you look at Fort McMurray's price point, historically they've been at about $815,000 for the average detached home. So there's lots of room for Fort St. John's pricing to increase. And really, Fort McMurray is the only other town that's had the level of industry growth that we're expecting to see in northeastern BC right now. So based on what we've just learned about northeastern BC, we're going to spend a little bit of time and just quickly touch again on each of these on the chart that lead us to increased property values. First is GDP growth. Because of the mining and the forestry and the development of Site C and things like LNG, we've got very strong gross domestic product that's going to be the basic economic churn that's going to push us through the chart here. So with job growth, again, because of Site C, because of LNG, because of forestry, we have stronger job growth and stronger wage appreciation than anywhere else in Canada right now. That's leading to the next piece. And when you have job growth, we've learned that you're going to have population growth. And we're seeing that in spades here in Fort St. John right now. But one thing I didn't talk about earlier is that we also have Canada's highest per capita birth rate. Really important to note because the average age here is under 30 years old. So the population growth here over the next 10 years is expected to grow faster than anywhere in Canada. Again, population increases. People typically will rent for a while before they buy, and that's going to lead us to an increased rental demand in short order in northeastern BC. Of course, when this happens, decreased vacancies are the next result, and of course, when vacancies decrease and the demand jumps up, increased rents will occur. So finally, when property purchase demand kicks off, we're going to see what is basically the holy grail for us real estate investors, and that is finally increased property pricing. So when you look at the whole chart, Fort St. John and Dawson Creek, northeastern BC, really kicks off each one of these in detail and brings us right down to the main economic fundamentals that drive a thriving real estate market. And of course, when all these things happen, it leads us to what we're looking for, which is a strong return on investment. So, above and beyond what we just talked about, why northeastern BC is a real estate investment strategy? Well, number one, there's excellent economic and demographic fundamentals, some of the best in the country right now. Increasing rents are going to lead to stronger cash flow. And what I mean by that is when you look at a property now today, if rents are estimated at a certain level, as long as the property is cash flowing very strong right now, as rents continue to increase, cash flow is going to increase as well. Okay, so that's a really important thing for us. And last is second to last is the robust market to sell into. There's going to be a long-term sustained demand for real estate in Fort St. John and Dawson Creek. So that means when it's time to sell, when it's time to take your chips off the table, you've built in your exit strategy as a result of that. And finally, the capital appreciation on top of the cash flow in this area is unparalleled in Canada right now. So I'm not going to spend too much time talking about the individual properties, but we'll go through quickly some of the opportunities and see what makes sense for you. So first off, Energy Park is one of the subdivisions that I'm currently involved in. It's approximately a 250 unit subdivision in southeastern Fort St. John. Phase 1 is currently sold out. Phase 2 we are building, and we're about 40% sold out in that phase right now. Phase 3 will occur the latter half of 2016, potentially 2017. The other major development that we're currently working on is the station at Fort St. John. So it's Fort St. John's largest master plan community. It's a total area of 220 acres approximately. We're expecting to see as many as 5,000 dwelling units and lots of really upbeat and modern commercial and retail amenities. So hotels, restaurants, major shopping, health facilities, also in the southeast quadrant. So in phase 1 of the station, which will be coming online probably in the next 60 days, we're going to see as many as 600 units in a variety of types. So duplexes, single-family homes, legally suited single-family homes, townhomes, condos. We'll have a lot coming out in that subdivision shortly. So one of the homes that I'm very proud of, that I've personally purchased several of, is our Crestview plan. So this is a very rare, legally suited house plan. There's a garage for each unit. Meters, utility meters have been separated so that the basement tenants can pay their own heat and power and everything. Soundproofing has been done. There's independent heating systems, independent hot water systems, and just a real nice property to take a peek at. So we're not going to get into a whole bunch of these specific properties because we've got a lot more on those individually in other presentations, but this gives you a good indicator of what we do have available. So with the Crestview plan, we are seeing approximately $1,000 a month in cash flow right now based on a $4,000 a month in rent. And that's breaking out to about $2,200 for the upper suite and about $1,800 for the lower suite. By the time we take out our vacancy loss and our discounted management fees have been applied, actually I haven't even taken that off. We receive $200 a month in fees. I haven't put that in. By the time we factor all of our costs in, assuming that you can get a 30-year mortgage at 2.6%. So I know rates are starting to increase right now. Even if you bump that to 3% on a 30-year mortgage, you're still going to be landing somewhere in the neighborhood of $1,000 a month in positive cash flow. So for a brand new property, it's a really great little suited legally suited house. So one of the other things that I personally love to buy are side-by-side duplexes. This way you control both sides of a home. You've got two homes appreciating side-by-side that you can control. And we've got several different floor plans and options for investors for these kinds of homes. So something else that I'm very proud about and have personally bought myself are the Signature Point executive condos that we're promoting in Fort St. John. These are starting at $285,000 with more than $300 a month cash flow. We are going to have additional presentations and property details on these separately, But these are just great little, pretty turnkey units that don't require a lot of hands-on management. So just a fantastic option for somebody that doesn't want to take on a big job. Okay, just some pictures of Signature Point. This is one of our popular units. This is the C unit, and just nice big open floor plan, lots of high-end finishings throughout, and just a real gem of a property. And thank you very much. This is the first online video that I've done for out of town investors. So I hope this makes the process a little bit easier in trying to understand if Fort St. John and northeastern BC is a market that you want to get more involved in. Appreciate your time. Feel free to call me at 250-262-9338 or email me at mitch@mitchcollins.com. Thanks for joining me.